Hey,
Hello.
okay, we have serious business to get to tend to today. No fun and games. It's all business. We got to get y'all out here and get houses quick. And how do you do it the best? Is by having good credit, right?
Yes. So first, let's welcome you to Spilling the Tea on Real Estate.
Oh, I
Right.
jumped in so fast. I thought they know us by now, but you're right. Go right ahead.
Thank you for joining us. I'm Victoria Garay. I'm an agent at Exit Strategy Realty in Chicago.
And I am also an agent at Exit Strategy Realty in Chicago. And my name is Lana Realtor Diva. And welcome to Spilling the Tea on Real Estate. I will back up. I was so excited because we have two great guests. I know you guys know we do our monthly thing with Natasha. Usually we are in her beautiful location, but this time we are in our studio location and they are in our green room. But we are going to focus on credit and how we get credit for the purpose of buying a home today because there's credit you need for your life. Fix your life. You need credit for everything. But we are doing real estate specific today. But we should probably just go ahead and let them come on, don't you think?
Yes. Let's jump into it.
Okay. Hi.
Hey
Hey,
guys.
ladies. We got a lady filled show today, guys. So we are going to be real laid back. We want people to ask questions. We're going to be watching your questions. I'm going to give a little background to how I met Tamara. Am I saying it right?
Yes.
Okay, correct us. We're going to call you the credit guru in a minute. But I met her at an event and she was helping us with entrepreneurs and doing business type credit. Um, for your biz to get your business going. And I am entrepreneur by heart, before real estate and beyond. So that is very interesting to me and tips that she gave us that we had no idea about how important it is to have locations and LLC and da da da, da all of this. But so I just want you guys to know she does a lot of stuff, not just real estate to help us get this going, but she can help you with all of that. But it was very interesting to me. And then I talked to Victoria about how great that was. And we were saying we needed to bring her on today. And I know that Natasha can talk to us about why credit is so important and what the numbers need to be to get it done, to get a loan, because that's really the end goal, right? So, Tamara, why don't you just let us know, like, maybe a little bit about you that we might not know, and then like just jump into uh, some tips, and then Victoria jump on in.
Okay, wonderful, wonderful. Thank you, ladies, so much for having me. It's a pleasure. Uh, my name is Tamara Glover, and I am a credit bully. I don't call myself a credit specialist because I bully the bureaus, credit agencies, which what they really are. They're not bureaus. There's only one bureau. But a little bit history background on me. As you know, I explained how I've done so many different things in my 50 years on this earth. You name it, I've done it. And one of those things that always uh, was a core of everything is your credit, personal credit, or if you're an entrepreneur, the business credit. And then even with business credit, personal credit plays a huge part in it. I've been an investor, homeowner, real estate, home daycare centers, all kinds of things, but everything boils back down to your credit. Credit is key. And so over the years, up there, down there, up there, down there, and then being around other persons of investors, I learned so many things. I got into different rooms and I started learning and like, okay, you know what? These are things that other people need to know. And it turned into an actual business because I was doing it for family, friends, my colleagues, my clients, whatever. So it just took off from there. And my business partner and I, we started His and Hers Consulting LLC, and it just took off from there. But our passion is to help others to get ahead in life, whether it be just for purchasing a home, for a business, helping with your children, but also knowing your rights as a consumer. So a lot of people don't know that you have special rights as a consumer, not just as, someone who has, a credit score or a social security number. Wait, am I talking too much or was I supposed to go into this?
This is
Okay.
great information.
Okay. Great. All right. So everybody everyone is a consumer, and as a consumer, you have rights that were put into place by Congress. And so, one big tip that most people don't know is that every single thing on your credit report is actually fraud. It's called aggravated identity theft. If TransUnion, Equifax, Experian, LexisNexis, Innovis, all those little, I call them little cousins, if they didn't contact you and ask you, can they report information on your consumer report as far as like your name, your address, accounts, things like that, then it's aggravated identity theft, which is a form of fraud. So you as a consumer have the right to say what you want on your credit report and what you don't want on there, or if they're defaming your character. So that's kind of one of the angles, that we go with. But credit is so, so, so important. So just kind of want to throw that out there now.
Wow. Okay. Wouldn't have known that.
Yeah, they're defaming me every day. Okay, I'm coming right away to get undefamed because I'm tired of them putting any craziness on my account. But so what, Natasha? What score right now would you say someone needs as a minimum, and what would get them a good percent, like a good interest rate?
That is a really good question. So our minimum credit score requirement just changed to 550. But you do have to put 10% down. That's a recent change for guaranteed rate. However, 580, 3.5% down. Now, I will tell you, the better your credit score, the better your rate. Once you get a 620 credit score, you start qualifying for some down payment assistance. But our best down payment assistance score is a 640. So that's pretty much the qualifications. If you're looking for an investment property, you generally want to have a 700, 720 credit score to make it make sense. But of course, we have to run all different scenarios. So as low as a 550, 580 will get you into the door with the lowest down payment, but you're going to have some underwriting restrictions on there. Once you get, the 620, you start getting down payment assistance. And at 640, you'll get our best down payment assistance with the lowest interest rates.
Okay, and someone just asked, because I'm so glad they read my email last night and said, you're the queen of 203K out here. Like, everybody knows that is you who we go to. And they said, does the credit scores change for 203K?
No, it does not. So we follow the same credit score guidelines as we would for non-203K. But I will say for instance, because we want everyone to be successful with a 203K. And the way I go about 203Ks is not just to get you into the loan and leave you hanging, because I know that you will run across some type of problems dealing with contractors. So if you come into a 203K with a 550 or a 580 and you have a mishap, and then you need to go to Home Depot and get a line of credit or a credit card for $20,000, you may not be so likely. So yes, I will do your 203K loan with the 580, and hopefully you'll have some, never go back to Fresno or blanket money, as we say. But you definitely do want to try to have either great credit, better credit, or a backup plan in case something happens through your construction process. But that's a really good question.
Okay.
And
Tamara, go ahead.
I was going to say, and I don't have right now any down payment assistance with the 203K. So if you're looking for the 203K, the MMRP in Chicago, that grant just went away. It does go and come back. You can kind of Google, or ask Lana for information, or Victoria for information about that. But we do offer the HUD $100 down program. And that's just if you find a property that's owned by the government, which we call HUD, we will allow $100 down, whether it be a 203K or a regular FHA. Sorry to cut you off.
Oh, no. That was really good information. Mm-hmm. Tamara, we had somebody today who came to me saying they need 40 points. They need 40 points to qualify. Okay. If they needed to do something first, I know you don't have their credit report, so it could be a little different for everybody. It's going to definitely be more specific if you have a credit report. But what would be something you would tell them to do as a tip to get it up the quickest?
Okay, so first thing I tell them to do is actually pull all three of their credit reports. And a good place to go is like Experian.com or Identity IQ or MyScore IQ, and pull all three credit reports. First thing you want to look at is they want to make sure that their name is spelled correctly and that there aren't any alias names, because sometimes when you fill out those CVS rewards and Walgreens or whatever, sometimes they'll give you alias names, and so those actually can take away what's called data points. Data points are important to the lender, so you want to make sure there's no alias names, no fraudulent names on there. That's first. Check for the address. Make sure there's no addresses on there. There should only be one address, so they're going to be removing all old addresses. Then they're going to be checking for employer. Make sure you only have one employer on there. There shouldn't be like 45 employers on there or misspellings of the employer. Then check the date of birth. Then after that, first, most important part is the payment history. Make sure there aren't any collections, charge-offs, late payments, bankruptcies, repos, things like that, because that's the largest portion of the credit. That's 35% right there. That in itself could drop a person like 100 points. So want to go through and make sure none of that's on there. That's number one. Then the second most important part of the credit report, and a lot of people kind of overlook this, is credit card utilization. That is like 30% of their score. So sometimes just paying down those credit cards can get those 40 points, that they need. I'll give an example. A sweet spot is 2 to 9% utilization on credit cards. So let's say someone hypothetically has a $100 credit card limit, right? They can use a card and charge it up, but before that bill is due, they want to pay it down between 2 to 9%. So $100, that's between $2 and $9 owing. That's a good sweet spot. Some people say, they say stay at 30% or under. No. You want the sweetest spot and the best score, 2 to 9%. So that's with every single credit card they have. And then the next thing would be having mixed use of credit. Sometimes people have loans, but they don't have credit cards. Or they have credit cards, they don't have loans. So you want to have both. Mixed use of credit is a percentage of the score as well, too. So you want to make sure they've got both. And then inquiries. Inquiries are big. Sometimes you go apply for that car loan and you told them one person can pull it, and now you've got 25, inquiries. So you want to make sure that there's not a lot of inquiries because, again, they don't like to see more than 2 inquiries or new credit within a 12-month time frame. So those are just a few things that they can go and look at on their credit report. And sometimes there may be some fraudulent activity on there that they didn't, allow someone to do those things or whatever, or they didn't do it. So that's usually why I tell people to start if I can't see their credit report personally.
So what was the time frame that you said, like if you're looking for a house and they want to compare 2 lenders or something, and both of them want to pull their credit report, if they're doing it within the same week, month, or 2 months, what time frame does it not affect them as bad?
Everybody wants to know. Let me tell you, everybody wants to know.
They think it's going to drop their score so much, and they always tell us, I can't go anywhere else. And you guys they'll call us and say, they ran my credit, and now my score is 10 points less. I'm like, it can't possibly be that one time.
Or they never start the process of getting pre-approved because they're so concerned about getting that credit pulled that they think it's going to drop them, right? But then we can't tell them what to help them with, or if they are at the level where they can be approved now, because they're so focused on that one thing, like the inquiry.
So if they're then like with that 30-day kind of a period, it's kind of like, okay, they're shopping for a mortgage. So it's not like it's going to be like a 30, 40 point, drop. No, it's not a big deal like that. And then again, the other thing is this too. Points that they lose are based on the other stuff too. So when you don't have like those late payments and all that other stuff, inquiries aren't a big deal as far as the points. When you're someone who's got like a 500 credit score, then you may lose quite a few more points than someone who has a 700.
Right. And that's what
It makes a difference.
Say there's another reason. If you lost like that, there's some other reason.
Yeah. So if you already have been pre-approved, or what you have to work on already, then don't do things that are going to get those inquiries. But we do need you to at least attempt the pre-approval so that we can know if you are approved. Or
don't go shopping for a car.
Right.
unless you're going to like your credit union or your bank who's only going to pull it one time, maybe from one bureau.
Right. Now I have a question for you, and we're live, so I'm okay if I've been incorrect on this. So whenever I get a claim, I get claims that tell me that like every single day. So the way I explain it to them is I say that if you go to the mall and get 10 department store cards, it's a probability that you'll get 10 different credit cards through Victoria's Secrets or whatever. If you go to get 10 different mortgage, pre-approval scenarios or opinions, it's not likely that you'll buy 2 houses. So I always tell them that consumer credit and mortgage credit inquiries are rated different because they have to bring your score down to see what's going to hit before they allow you to keep getting 20 and 30 credit cards. So I always tell them like it's a difference between consumer and mortgage credit. And most of my clients will say, well, my credit score dropped when you ran it. And I'm like, your credit score dropped because maybe your balance was not maxed out then, and it is now because the reporting time of the credit agency is different, right? It's about 30 to 60 days in arrears. So that is what I tell them. And then I tell them they can Google it because I don't want them to think I'm a salesperson, but I do have to have my credit pull in order to issue my pre-approval to help them win bids, you know, from realtors that I've closed deals on time with in the past. So that's what I've been telling people. But now we have a credit specialist on the line. We can just make sure that I'm validated.
Absolutely. You're correct.
Right. And you know, I just went to get myself better. I always go to learn about this credit stuff and to learn what I can tell other people. And one of the suggestions that this person made was that if you know you're not going to maybe pay always on time, because once you miss that date, it's going to start to report maybe after 60 days. Maybe some people report after 31. He said some report at 60. But he said make a payment every Friday of what you're going to pay anyway, because if you're using your cards to make your score go up, but then don't use your debit card because you're not getting credit for it. And then he was saying go in and make a payment, like if you're doing gas and you know you're going to do it, go pay on that Friday or go pay the day that you go get the gas, because you'll have all of these payments that are going towards that final day instead of waiting the whole month and missing a day or a one day, you know, or and then it's going to show as late.
So what I usually suggest to my clients is get credit cards that give you something back in return, because technically banks aren't really giving you great interest rates or nothing like that. So if you know you fly a lot, go get a card, you know, with the airline that you fly the most with, so that way you can get something back. And I say, put your debit card away, put it in a jar, freeze it, whatever, right? Don't use cash. Every single thing that you would use cash or your debit card for, use that card. So that, number one, you're getting rewards, you're getting something back. And that way, you know, again, you're getting something back, you know, some money to fly, whatever. Or if you like shopping, maybe it's a store that gives back, you know, card that gives back gift cards for shopping, or a hotel card or whatever, right? And then be disciplined. Like he said, be disciplined. The money that you would have spent, send it toward the card. If you know that if it's sitting there and you're going to find something else to do with it, send the money. Like you said, once a week, every Friday, send the money, send it. But the other great thing about that is you're not paying as much in interest if you let the balance sit there till the due date again. So now you pay more money in interest. And so it's kind of like defeating the purpose of getting the points for the airline. So if you're sending the money every single Friday, you're paying less interest. And also you're getting something for what you probably wouldn't have been getting anything for.
Okay, someone just texted me. They're embarrassed to put their question on Facebook, so I get it. They said that they had a credit card that they just had at a bank that they didn't typically use, and they would charge one thing just to keep the card active. They charged something on it and they forgot that they charged it. It was a smaller bank, so they didn't get notice. They said that they had the card in January. I guess in March, they got a letter that said they were going to be closing the card if they didn't make a payment. Okay. She said, is it normal for them to close cards in like a 2-month time period for just a no payment in 2 months?
Yeah. So some card companies, what they like to do is, first of all credit card companies and even credit bureaus are in business to make money, all of them. Credit bureaus technically want you in their system because they get paid from, well, they kind of like are in each other's pockets. They get paid from the creditors by having you in their system. And then the credit card companies, by you having late payments, they can charge you a higher interest rate and make more money off of you. And so can, banks and other lenders and things like that. They can make more money off of you having a lower credit score. So technically they make money like that. But some credit card companies, depending on, if they're like what they call like B credit card companies, like, the Credit Ones or the First Premier companies like that, if you're late one time, technically in the contract, they could close it, if they want to. But if you go to the 60th day, the card can be closed, or some credit card companies will actually just lower your credit limit before they close the account out. And then some credit card companies, even if you do use it for a small purchase, here and there, whatever. If they're not making enough money off of you, they'll just close your account with no notice. So you don't even have to be in, like, 30 days late, or 5 or 60 or whatever. They're not making money off of you, they might think, well, we'll just close it. Or sometimes if they see that you've been late with another credit card company, because they can see your stuff, they'll actually close your account then as well too.
Oh, wow. Okay, so we missed a question from Sean Ashley earlier, and it said, is there any way to work with a client dealing with child support rearage? So I think this might be for Natasha, maybe?
You said what?
Did you see that question? I said, is there any way, this is
Is
someone
there
that,
any way to work with the client dealing with child support rearage? Of course. So if you have child support rearage, that's not a problem as long as you're in a payment arrangement to pay it back. So generally, if it's a collection, we're going to take 0.5% of the balance to qualify you. And if it's not the 0.5% if it's not in collection, then whatever payment agreement you have, say for instance, you're 50,000 in rearage and you went to court and a judge said you owe $500 for your current child support, and then you owe $700 for your rearage, which total $1,200. Then we will take the payment as long as there is an agreement. Same thing with a judgment. If you have a judgment on your credit, you don't have to pay it off. You just have to make 3 payments, and you have to have an arrangement with whomever you have that judgment with. So FHA opens up the bandwidth for you to be able to do a lot of things with, different credits, and it's case by case scenario. So don't be the person that doesn't get done because you assumed you can't do it. Definitely just give us a call or email and let us know, because I am the queen of doing a lot of what they call it gray area, just meaning that my clients have unique situations, and if it's something we can do, we'll coach you through it and let you know what you need to do. If it's something we can't do, then we'll let you know that we can't do it, and then we'll put you on path and let you know when we will be able to do it after you master certain steps.
which would be a great idea to send to Tamara, and she could do, if you really need help, she has this whole company that can get y'all right.
Yes. And I just want to say, because sometimes, Tamara, they like to cheat on you and slide back to me. And I'm going to know you cheated, right? Because I'm going to see the disputed accounts. So when you're with Tamara, you want to make sure that you finalize your credit repair. Because what happens is when she puts things in dispute, she has to finalize them as a lender. Because she'll put something in dispute, it'll make your credit score jump. And then it'll come back down when she takes it out of dispute, or it may even go higher. But as a lender, if it's non-medical, we have to have it out of dispute, if it's more than $1,000 in order for us to proceed. So there are a few steps. Some people run a Tamara and their credit score jump up 80 points in 2 weeks. And then they're running right back to me. Exactly. I'm ready. So you have to make sure that once you get started with Tamara, that she tells you that it's okay to come back to me to prevent you being frustrated along the way. And sometimes you'll need credit repair and we'll refer you to Tamara. And sometimes, you may just be maxed out on your credit cards and it's something like you may not have time to do a credit repair. So just always consult with us. We're not here to just get a check from you or take your money. We're here to help you win. So if it's something that we could tell you to do where you don't have to pay, we're going to recommend that. And then if it's something that you require credit repair, then we're going to recommend that too. But we're definitely going to put you into a situation to win. And I know that was long, but the last thing I want to say is that be aware of who you do credit repair with. Because I have a lot of agencies that I'm not going to say their name right now, and I've never seen them fix anyone's credit, but they're on a monthly payment forever. But, they're kind of stuck into that relationship. So, Tamara, I don't know if you want to speak on that, but I do have clients where it's like they just want their $99 for the rest of their life, and we don't have an end date. And it's like, we're not fixing any credit here. We don't want them to take 3 years just so you can make extra money. So tell us about that, ma'am.
I am a victim of that myself. It's called a membership. And so they're sending out these templates, and they may be sending something out, but because they're templates. So here's something that a lot of people don't know. So the credit bureaus have a computer system called eOscar. eOscar well, basically they get over 10,000 letters a day, right? So they didn't have the manpower. They didn't want to hire the manpower to read every single dispute letter. So they got this computer software called eOscar. So the letter comes through, eOscar recognizes a few words or some lines that look similar to 10 million other letters that they got. So eOscar spits out a code and just sends out another response saying, okay, this is frivolous, or this was came back verified, or whatever, when it never actually went anywhere, but they just send it out. And because most people get discouraged and they're like, oh, well, they said it was verified, or whatever. But when those letters that look like other letters that come through there, that's what happens. The computer system just spits out a response and nothing happens, right? So if you're paying for a membership and they're sending out the exact same letter for every same person who has a similar whatever going on, that's what's happening. And so nothing is going on, nothing's happening, because eOscar keeps recognizing this same letter, like a 609 letter, and then it keeps spitting it out, and you're paying every single month. You think that things are happening, nothing is happening. So vet the company out beforehand. If you can get some testimonies, or somebody that you can call, or you can see whatever, before you just go jumping up with a monthly 24-month, 36-month membership. So get some testimonies, or somebody you can call to verify, but do your due diligence.
Yeah, and this has gone longer than we had anticipated, but I'm continuing to get a few questions. I don't want to leave these people out in my inbox.
And I have a
If you guys
question.
are interested, we will continue. You got one? You go ahead with yours, because I got
Yes.
to read through this.
Okay, so Natasha, well, I'm gonna summarize this question. Once people get the pre-approval, in our opinion, people feel like they're done, like they got the pre-approval. But we always tell them you still shouldn't be purchasing things like that. Someone ran into an issue where they refinanced, like they were under contract and they refinanced, and they felt like that put them in a better situation because they refinanced, but it caused a problem with their loan, because it looked like a new, I guess, like a new line of credit or something. So they're just asking, why is it that they had a lower payment in the end, but they still ended up having problems with their loan? And is there anything else that they need to not do that they should be aware of, I guess, along those lines?
Well, without knowing the whole situation, I can guess that what happened was they refinanced their car or whatever, consolidated the bills, and then they had a new account. And what their lender may have not closed out the additional accounts. So what happens is, like, if the one account was $500 and the new account is going to be $350, when we see the new account, we're going to add it. But you have to do due diligence to say, well, you had a new account. Did you transfer funds or close it? They're going to automatically assume it's just a new account. But if you refinance the car or consolidated credit cards, then you should say, hey, I opened Chase for $350, but I closed Fifth Third for $500, because it's going to take 60 days to see that Fifth Third is closed off. So unless you tell us, we won't know that you actually did a refinance. We'll just see the new account. The other thing that can happen is that when you do that, our credit is good for 120 days, 4 months. But sometimes when you refinance, when that account closes and the new one opens and you have a credit inquiry, sometimes your score will go down to go back up. And Tamara can tell us about that. So they could have had a situation where it was closed. It could have showed closed before it was paid to zero. That's another big problem. Sometimes people close their accounts with a balance. That's number one no. That drops your score. So two of the things can happen where their lender just missed that they replaced debt and they didn't zero out the debt that was replaced, or they had to get a new credit pool because it was over 4 months. And when they reran their credit, their score could have changed, and now they qualify for different debt to income ratio thresholds. And debt to income ratio is, the amount you qualify for on a home. Like if you make $1,000 a month and your debt is 500, then your debt to income ratio is 50%. So I'm guessing one of those two things happened. It's okay to refinance during a loan process. We don't want you to do it, but if you have to do it, just consult with your lender. Just like buying a car, like if you have to do it, we definitely do not want you to do it. But if you do it, just call us first, because we do get indications when new account is added, even if we did not repull your credit. So always be honest with your loan officer. I know sometimes people don't like to talk to us and they think we're like the court system and the judges, but we really work for you. And the more information we know is better, because deal structuring is a craft. Everybody can submit paperwork to the underwriter, but sometimes deals have to be structured and explained properly so the underwriter doesn't just start guessing the storyline. So every scenario can be good as long as it's explained properly. We're like lawyers without a law degree.
I want to add one other thing too. And also when they refinance, that changes their history, their age. So now having a new account, now your age goes down, which affects your score as well. So sometimes it's not good to, refinance because of age, and age is a part of your the 5 parts that make up your credit score.
Okay.
And I can close in 3 weeks, if you have it all together. So sometimes we could just get it on out the way before you guys start, making drastic
Messing with stuff.
your profile. And Lana can find you a house and Victoria can find you a house right away. So just talk to us first. We may be able to get you in your home before you start making changes to your credit that can drastically affect you.
Yeah, and when Natasha mentioned, like, she is the most real lender I know. Like, y'all just tell your dirt. She's been there before. She knows. She's heard it all. Like, it's really the best way that both of these ladies can help you is to know the situation. Just close your eyes and say, like, this is the situation, because if we know it ahead of time, it's when we find out later that we really can't help you with much. Like, it's a whole situation at that point. This question is hard because I don't know who it goes to exactly, but they're saying that the big story that we always get is, it better to short sale versus foreclosure? And they're saying they understand that it impacts you longer if it's a foreclosure, shorter if it's short sale, but they're wondering about the actual like point situation. Like, does the points go more if it's a foreclosure versus a short sale?
The points on the credit. They're saying if they do a foreclosure versus a short sale, do they lose more points on a foreclosure versus a short sale for filing that status? So if they foreclose, is their credit better off than if they did a short sale? A short sale is.
So here's the thing. On your credit report, it doesn't say short sale. That's something that's probably like recorded with the recorder of deeds or something like that. If the mortgage went into being, delinquent, it's going to show delinquency. It's going to show either, 30, 60, 90, 120. Then it'll show, charge off. Now, it doesn't technically say the words, foreclosure, but it's the same bearing if it's, 30, 60, 90, 120, charge off. So it's still negative. It's going to drop the score. So it doesn't make a difference if you did do a short sale, unless the short sale was done and you didn't have have it in your personal name. If it's under a business, that's, it's different, that you didn't personally guarantee. But if it went 30 days late, it's negative, and it's from 50, 100, depending on where you're at on with the rest of your stuff that's going on your credit report. So it's still a negative bearing.
And then for Natasha, for you guys, if you see that they have one or the other in their past, how does that affect getting a loan?
So when we look at your credit, if it says paid less than owed in the description, we're going to consider that is a short sale. If you have a short sale, it depends on if it's FHA or conventional. Y'all making me think of guidelines right now. So on a FHA loan, I'm almost certain the short sale period is 2 years, whereas on conventional is 4. But on a foreclosure, FHA is 3 years and conventional is 7. So it's definitely a difference between, your when you can buy as it relates to a short sale and foreclosure. Now we do have other stipulations, right? Like if you file bankruptcy and you're in a conventional loan and you surrender the property, meaning I filed bankruptcy, I don't want this property anymore.
Cash
then
for
we don't
keys.
look at
Cash for keys or something.
So what?
Did we used to call that like cash for keys or something when they would give it back? Okay.
And then they start giving the deeds back to you, like, you keep your property.
Yeah. That was old school. That shows my age.
Right. But yeah, but so you can surrender if you surrender the property and then it foreclosed, then as long as it's if you don't own it anymore, then we just go 4 years after your bankruptcy if you file bankruptcy. So I know that was very confusing and a lot of information. So just give us a call one by one. You can own a property with a short sale, you can own a property with a foreclosure. Once again, the waiting time is just when you can buy again is the difference in my world. The credit, I just kind of go off whatever credit score you get when we pull your credit.
Victoria, did you have any other ones on your side? I think, one more coming in. I mean,
Hey, we're not turning
deed.
down questions,
I'm not turning down no
It's
questions. We got
Tuesday.
somebody just said deed in lieu, Carmen. Oh, hey, Carmen. That's an age. She said deed in lieu. It was also called the deed in lieu days, right?
Mm-hmm.
Yep.
You said
Okay.
a deed in lieu?
Yeah, she said deed in lieu.
Right. She
Okay.
said, what was the question for the
That's not
foreclosure
her
short
question.
sale?
She was just making a comment. I think on when I was calling it cash for keys, it's really like deed in lieu.
Oh yeah, deed in lieu. Mm-hmm.
Yep. Okay. Did you have other questions, Victoria?
I have one that asks, are any of the free credit reporting sites accurate?
Annualcreditreport.com is a great site right now since COVID. Every 7 days, you can get a free credit report. They just don't give you a FICO score.
Yes, I just learned that in this last class I went on Saturday. They said you can pull it every month because somebody said that people are reading their credit a little too much because they're getting mad because every other month it's going down. And they were saying, like, if you pay off a whole credit card, of course it's going to go up. But if something has an issue with a payment, it's going to go down by the next 30 days or whatever. And so people were saying, why does it fluctuate? And they were telling people, if you're pulling every month, you might get a different number. Yeah.
Now, Credit Karma, I would only use them just to check to see what's on there. I wouldn't go by the score at all. Not accurate at all. No.
So that brings us to something. We don't use, I don't know, you got me with these names, Oscar somebody, somebody, but the house credit people, whatever organization, whatever y'all call it, is different than what we use for our regular credit. Am I right?
There's different credit reports. So you've got for your mortgage, there's a credit score for that. There's one for auto. You have an insurance credit score. You have one for medical. And there's secondary credit bureaus that house different things like that too as well. Like LexisNexis houses for like your auto insurance if you had an accident, things like that. If you get prescription filled, they calculate everything. Everything's got some. Yeah.
So if you see on Experian, you're a high number, or on Credit Karma, it might not necessarily mean that you're high when Natasha runs your credit.
Correct. Because she is pulling a mortgage FICO.
Right.
Yes, we get a lot of pushback on that.
Yes, nobody
They're not
believes.
going to ask the loan officer because they're afraid of you, right? So they're going to call us and say, Natasha said I'm only this, but I know I'm at least this because I get my Credit Karma. And we're like, okay, then we have to explain that. But we're also like, when she told you that, why didn't you ask her? Why didn't you?
Right.
And I normally break it down. I, Natasha Robinson, will confess that Credit Karma, you will almost all the time be wrong. And the good thing about Credit Karma is that sometimes you're wrong in a positive way.
Yeah, that's true too.
I've seen clients where it came back 600 and it was a 700 on, maybe 1% of the world, but most of the time it's generally between 40, I would say between 20 and 100 points off. Yeah. And I use that same speech I told you guys earlier about consumer credit. And, I that's how I explain it to them. And then I try to send them over to you. I try to send them to the professionals.
So this question, I'm going to summarize because it's kind of long. So they say that they were in a relationship at one time, but never married. Then they separated their dating life, but they bought property together. So one person is taking on the responsibility of the mortgage, but it's still showing on the other person because they got the loan together. She wants to take her name off of that situation, but she was listening to you say that if she takes something off, then the years will be gone. I think she said like she's been doing it for 11 years. So she's saying if they take that off of her and they only leave it on the
They
guy.
have to do have to get a new loan. She can't just be taken off of it. She's still responsible. So they have to get an entirely new loan, or like, because if she's on the deed, it's got to be either quick claim deed and then a whole new, mortgage loan. And then what it'll show up on her credit is that the loan closed if they get a new loan. So it'll be closed on her end, and on the other person, it'll show closed as well. And then the other person will have a new loan, or if they just completely sell the property, then on both ends it'll show closed.
Okay, so her ending the relationship by them ending the home on her credit, it will show closed positively because they'll be taking it to another person's
Right.
situation.
Exactly.
Got it.
But here's the thing, with it being closed though, if she doesn't have any other installment loans going on, let's say that was the only installment loan she has on her credit report, and she's got, credit cards, where her score is going to drop because now she doesn't have that mixed use of credit. But also usually when a loan is closed, the score will take a dip. But if she gets another installment loan, it'll go back up if it's in, good standing.
And I have some gems right here, because most loan officers probably don't know this, but in this particular situation, you can actually get a second FHA loan. Why? Because you were an original wage earner who is no longer going to be residing in that home, and you're going to get a new home. So my suggestion would be to call up Victoria Lana, call me, we'll get you pre-approved, look up the loan. Most FHA loans are assumable. So you can call the FHA mortgage company, the other person that's on the loan. If that person will qualify without you, then that they can assume that mortgage and continue on that mortgage. You will come off, right? It'll show paid on your end, but you can actually get a second FHA mortgage, and you don't have to wait before the new one. I just learned that, y'all. I've been doing this for a long time, but I just learned that this year. So
that was a good information. We needed to put that at the beginning of the show.
Right. I'm like, look, for clarification, I have to sometimes repeat things. So I'm going to repeat what I think I heard you say.
Okay, so come on.
If it's an FHA assumable loan, has to be an assumable loan, right?
Mm-hmm.
Okay. And then one person wants to come off. The person wants to come off if they want to purchase a home. If the other person, if their income who's staying on the loan, if their income can sustain it or whatever, then the person who wants to get off and purchase a home can get another separate FHA loan by themselves, and then that qualifies them to come off of the other loan.
So two different things. You can get a second FHA loan if you were the original note holder and you are leaving from that home and that person is staying. So if you guys are separating, I'm no longer living together, and you're not going to live in you can get a second FHA loan anyway. If you want your name to come off of that FHA loan, second situation, you can see if your loan is assumable. And if your loan is assumable, then you can go through your servicer and ask to submit documentation to see if you qualify for the loan by yourself and if you can assume it, right?
Okay.
So once again, I don't know if anyone has ever been successful with that. I'm clear on the fact that you can have a second FHA mortgage if you are leaving a joint FHA loan. That's one guideline. But my advice is to call your creditor to see if the other person can assume the loan on their own to prevent the cost of a refinance. And if you're getting that mortgage 4 years ago, your interest rate is probably lower than what they are today. So then you would basically just take that mortgage and continue on, and you won't go back and start over from 30 years. So the original person will maintain their credit status and their credit history, and then you would come off that loan if the lender will allow you to assume it. And at the same token, you can get a second FHA loan if you were the original wage earner, not on title, you are on the mortgage and you are moving out and they are staying. That is now a reason why you can get a second FHA loan.
That is cool.
Look at this. And you heard it here first.
Right here.
On spilling the tea on real estate.
Yeah.
Guys, these have been really good questions. I'm shocked today. We don't normally get so many questions. Even if you want to be anonymous, it's okay. I'm not going to tell anybody anybody's business. If we have other questions, send them through because they are here. You got them. Natasha is selling the world. Doing loans around the world right now. So,
yeah, we need contracts. Anybody under contract want a second opinion? Call me. I can get you down payment assistance. IDA just dropped their rate to 5.875 on FHA from 6.8 last week. So we got a lot of good stuff going on around here.
What was
People
the
that
number
didn't qualify.
again?
Huh?
What was that number that they dropped
I,
to?
you said what?
What was the number that you just said was the recent FHA?
So Ida's FHA rates were 6 point something last week, like 6.8, 6.7, and today they're 5.8. So we dropped a whole point
Wow,
in a
a
week.
whole point.
And people that didn't qualify at 6.8 may qualify at 5.8, and they may get $10,000 or 6,000 in free down payment assistance. So we got a lot of good things going on right now, and I'm excited because we've been through a very crazy market. So as you can see, when we start seeing some good after the bad, we're a little more in cheerleading mode.
Yes.
Right.
We jump on all the good news. Any good news, we're like,
We
we're excited.
excited. They got me at the office all night getting these contracts. We got to take what we can, because if the rates go up again, then things slow down.
Yeah.
So now it's
Yeah.
while we
Yeah.
have it
Me and
in here, we
Victoria
keep
got
it
rid
going.
of our gray hair, so we're starting to come out of this.
Let's go. You got to push through.
Yeah, and I'm still working all day and night, so people can call me. I went back to working Sundays. I had taken those off. Like, it's just we're fighting for houses out here. We're going to be honest. We're fighting. If you want to sell your house, I understand. If your interest rate is 2%, you don't want to sell your house.
No.
If it's anything close to what we have, or you need a bigger house or a smaller house or a summer house or a winter house, whatever, we need your houses. Like, we really need some houses. So
That's why
got
you
the
want your
buyers.
credit tight and your pre-approval right.
Right. That's exactly it. Okay, guys. Oh, we got a question. What are the veteran rates?
The veteran rates, every rate has an APR and it's subject to, but the VA veteran rates are 5.8. It's just government loans have the same rate on IDA. But we would have to look at your scenario and give you an annual percentage rate as it relates to our current rates. And they do go based off your credit score, your type of property, and your debt to income ratio. That is the posted IDA rate out in public. But as a lender, when I quote you a rate, I have to give you the rate and the APR. So if you want a one-on-one scenario, I don't have to pull your credit. You can just give me your credit score, what type of property you want to purchase, and then I can give you a quote on what our interest rate and APR would be on that scenario.
Okay.
Oh, that's great. Tamara, is there any other, if people are still thinking of questions, go ahead and put them in. But is there any
Yeah.
big tip that you think that we missed, or something that would help people that we didn't ask about?
Let me think. Talked about credit card utilization. Oh, this is a big one. Some people feel like if they have a credit card and they don't use it, they think, oh, I'm just going to close it, so I'm not tempted. Do not close the credit account. I don't care if it's a $200, card that you've had since college. Don't close it. You may lose the history. Again, that age. Keep it open. If it's different if they close it, but don't you close. Don't go closing any accounts and just use it. Some people are like, well, it's got an annual, fee on it. Keep it. It's worth paying the extra $99 a year as opposed to losing points for closing a card you've had for 15 years, even though it's a low, limit card. It's the age that's on it that helps your score, and your score in itself. So don't close cards because you feel like, you're not using it or it's too low of a limit or whatever. To keep it. And then here's another thing too. You can always, people don't realize it too, you can always call your credit card companies and ask for credit limit increases. And you can negotiate your interest rate too.
Interest rate down.
If you are paying your card, and if you're not just paying the minimum balance, you got more leverage. And then if your score is higher than what it was when you got the card, you can always, threaten to close it or whatever, and say, hey, can I get a lower interest rate? And then every 6 months, keep asking for a credit limit increase. So now your utilization goes down, your available credit that's available to you goes up too. So that can boost your score up as well.
Now, I don't know if this is good or bad, so don't quote me. I did it. All I can say is I'm a real live person who did it. We'll see how the score goes in a little bit, but I did exactly what she said. I just went through my cards one day because I was over it with these 29. You don't even realize it starts out at like 0%, right? And you think you have a 0%, you forget. Next thing you know, it's 29%. Like, who did that? I don't know.
If you're ever late, they'll do that too. I'm sorry, I don't mean to cut you off. If you're ever late for a credit card payment or something like that, you might have a 0.2%, whatever. They will literally change your interest rate and shoot it through the roof because you were one day late. So
I
that can
went
happen
That's
through.
too.
good to know.
Yep.
I went through, and I was surprised at the answers I received. Like almost every card I had, which don't do me. Don't do me. I had a few too many. Okay, I got a few too many, but
It's okay.
college days, I'm probably still paying for pizza from back in like 1901. But anyway,
Those free 2 liters
oh,
with a
those
Discover
bags
card,
they used to give you to carry around, the bags, the
man.
water bottles, the pizza. I
Right. Yeah.
paid my
Like
dues.
mama
But
show you for not giving me no allowance. I'm just gonna get all these credit cards today.
Right.
right. So I ended up getting a lot of people giving me 3-5% down from that 29. I got a bunch of them. Now this might be where it's not good. I got a bunch of them that did increase my score. I mean, increase my amount. And they said, and you can transfer to this for 0 till whatever. I started transferring things from cards all over the place. I was transferring because I wrote the date down like it's until October. Well, clearly I'm paying that off before October. But if you don't pay it by October, they told me it's not just that 3%, it's going to be 16.9 or something, they told me, all the way back to the beginning. So you got to make sure you can agree to what you do. Then someone did mention at that last one too that Best Buy is one of the worst ones on going to a high number after, like they'll be at 0% and they'll say like for this many months you can pay your computer off or whatever, and if you don't, that they go
call
all
it
the way back. What'd you say?
We call it same as cash.
Yeah. And then if you don't pay it off by the time that you've said, they'll go interest all the way back, and it's super high. That's what they told me. Now I know on mine they weren't applying it to the, I had to call in and tell them I wanted them to apply my payment to that promotion I had rather than my regular next.
Right, exactly.
Yeah.
Yeah.
So somebody named Candace, hey Candace, said hi to
Hey,
us.
Candace.
Hi,
And she said, what can I do to boost my credit score for home loans? This show was all about that. So you might have come in late, but we can't repeat it all. I would go back and watch from the beginning because the whole show was about boosting your credit.
Is Candy responding? Can she tell us what she thinks her score is?
Oh, did you want to tell us your score
Candy,
online,
what's your
Candace?
score? Nobody can see, but
You could tell.
No, I'm
You could
asking
send
because
this to me.
if she missed the beginning, you only need a 580, but the higher the credit score, the better. And I'll let Tamara. I would guess she needs to see your credit to know how she can increase it. But Tamara, you can kind of chime in there. But 580 get you in the door. 640 will get you grant money.
And
Wait, you said 540. Wait, you said 550 earlier.
550 is 10% down.
Oh, 10%.
580 is 3.5%. 620 starts you off with the most expensive down payment assistance. 640 gets you cheaper down payment assistance. And the higher the credit score, the better the interest rate. With the 640, the IDA rate is the same, regardless you have an 800 credit or a 640. It's still the same interest rate. So if you get a 640, you get the rock and roll just like the 800, which is amazing.
That was a really good breakdown. It made me understand the different numbers, like what you get.
Let's do it.
Oh, wait, Candace did explain. She said mid 540, maybe.
Okay. Candace, what I'm going to say is, well, actually, for anyone who views this and sees this, if you guys say that you saw this show, we're going to do complimentary credit analysis reports. It's where your 3 credit reports will be side by side. Our software will comb through them, and it's going to break down the 5 areas that make up your credit score, and it's going to tell exactly where you're at, what you need to do, and you'll be able to physically see it. It'll be emailed to you. We can go through it together, and we can comb through it, and it happens within like maybe all of 3 minutes. So we'll do that complimentary. That's normally like $150. So we'll do a complimentary for whoever says that they saw this show. So I can do that for you, because with the 5 something, I'd have to see what's going on. Sometimes people have public records they don't know about. It could be just all kinds of different things, going on.
See what happens when you tune in to Spill the Tea on Real Estate?
Y'all not ready? You should tell your friends they should have been here. But we did have really great views today, guys. We will not complain about that because we heard a lot I saw a few shares out here. I'm getting people telling me they at work and they're asking, the friend is asking and sending it through my phone. So that's great. We don't have to it was nice that Candace shared her real business. So we had real life, but you don't have to share your real life. But we all are real people. And I'm not lying. I paid $100 million for pizza for the dorm from a year that I do not want to mention. And I probably got a water bottle. And I'm still friends with the friends I bought the pizza. So I guess, that came out of it. That interest probably $9 million. And nobody told me you had to pay the bill back then. I thought it's just like, I don't know. Well, hi, Candace. So, okay. I think we're cool. We've kept y'all on here for a whole hour. We got stuff. Oh, Candace is Denise. And Denise was the one we talked about earlier. So, Denise, if you didn't see from the very beginning, your answer is there. Oh, we got other people saying they guilty. I'm glad people feel me.
That's okay.
My mother.
That's the third emoji. Like, I got some text, and that's the third emoji I've seen since we've been on. They're like the covering the face emoji. So people are getting some good tips, obviously, because it's hitting home.
Yes. So what we need to learn from this is if people have kids that are going to college, the first day y'all leave the campus and you drop us off, they line the yard up with T-shirts and cute keychains and stuff we never care about, but you're going to get
gift cards. Now they're giving gift cards too, grocery gift cards and stuff like that.
Yeah, tell them they have to pay the bill. My mom forgot to pay that. Tell me that part. Like, you got to pay for the things that's charged. Oh, thank you. So, we have people coming in, but I'm looking at the phone and I'm looking here. Let me see. We got one other thing coming.
She's jamming over there.
We just had somebody that said they couldn't type on. They were watching from someone else's computer. They just wanted to say thank you to you ladies for being so real. That the real life situations help people understand that they can share their personal business. So this was really great, guys. Did you get anything else over there? Because we still have some strong watchers. So if you guys have something, you got them. It's hard to find us in these streets these days. So,
right. And we will make sure the information is in the comments, but always just contact us. And we, me and Lana like to play in our lane. We like to know what we're doing and what we're professional at. And then we definitely direct everyone to where they need to be. So if it's a loan question, we'll definitely get you to Natasha. And the same with the credits. So we, if you don't see their information in the comments, we will get it there soon. Otherwise, just contact us. And we will make sure to get you to the correct person for your question.
Yeah, you don't want to learn about credit from me. Except for going to lower your credit score. Look, I looked like I had a party. So what did I do? I went out and spent some money, right? That's not what I was supposed to do. But I was so excited about my 3%, my 0%, my balance transfers. I was like, now I can go have some drink and dinner on a credit card that I'm going to get some mileage for. Look at me.
No. I just thought about something else, guys. Some people may not know this. Did you know you can actually change your credit card due date?
I have done that a few times because I like everything later
in the month. Yeah. If if you got multiple credit cards and it's like, okay, this was the 3rd, the 6th, the 7th, the this, the that, and you can't keep up with it. Maybe you might want to have half of them due on the 1st, the other half on the 15th. So this way you're not all over the place. And like, you may have the money, but you may be forgetful, or maybe you don't use a planner or your, calendar, or, set things like that or whatever. So do things that, make your life easier. So, shift your statement dates around. And then, also that's another way where some people play around with their utilization. Some people like shift money from card to card. So if these cards are due on the 1st and these are due on the 15th. So maybe, they might pay these and then they take the money later on and take it from this card and put it over here. So the utilization doesn't look so high. So that's called, not utilization, but it's just another conversation for another day.
Yeah. And I think a good tip, if you're beginning at this to get your credit up, is set your due dates automatic for the minimum. That saved my life because I'm not good at remembering, and I have pay bill phobia. So if it's just, I have mail phobia. Y'all know some of my phobias. I got mail phobia.
We got to open that mail, ma'am.
I
Oh my
know.
God. Oh,
The
thank you.
number one reason why people like I'm literally at the office, and I know it's crazy. It is, where is it at? Let me show y'all my bag. Like I went through all of my mail, and it was so much more than this, but I had to come in early and go through, and I actually had three. One was $6.60 on its way to collection.
Thank you.
And it
Thank
was
you.
gonna
Thank
go
you
to my
so
credit.
much.
So because I
Thank you
didn't
so
open
much.
my mail, I was gonna have my score drop and have to call Tamara to fix my credit for
Listen,
$6.61. And
listen.
these are the bills that they weren't answering. So I still have these left, but I took care of everything else in the envelope. But I'm just saying, I'm at the office, guys, and you have to open your mail and you have to
Open
make
it.
sure that the address that you're using is coming to your house. Don't have some weird address you did at grandma's house and then your mother's house and then your ex-boyfriend's house.
That's
Make
Victoria.
all your mail go to one place because you want to make sure you're opening that mail and you're reading
Yes.
it and all of that stuff.
Absolutely.
I bought a property with I didn't give them my right address because I didn't want them to know where I live. I had tickets because I wasn't getting the mail. A $240 ticket cost me $11.70 and they garnished my check. And I'm like, wait a minute, it's embarrassing. I'm a manager. But I had no idea because they couldn't contact me.
Contact you. I'll give
It
an example.
was a vacant lot, and that was my mailing address. Like they couldn't
Oh,
contact me. So make sure that you open your mail and
yeah.
put your credit cards on auto payment. That's
Yeah.
my advice. And the last thing is stop thinking you need 20 credit cards. You don't need $2,300 cards. You know,
I was
if
getting
you can get
personal.
a higher one, then that way you won't forget. But if you're gonna have 20 cards, put every single one of them on auto pay for minimum payment, so you never have to remember to make the payment.
That check in the mail thing is huge. I had a client that had some medical things going on. So she was getting bills from different hospitals, medical bills or whatever. And two things can happen sometimes. Sometimes maybe the facility that you went to didn't send the bill over correctly to the insurance company. It wasn't coded right. So you're thinking the bill got paid. The bill didn't get paid, and the hospital or whatever facility is sending you out bills every month, but you're not opening or you're ignoring. You're like, oh, that was paid by the insurance company. Not opening it, ignoring it, whatever, right? Well, now it goes into collections. And then you find out that it's a bill that could have been paid. All you had to do was open it up and see that it said $7,000 and say, hey, call the insurance company. Hey, did you guys pay this bill? And they're like, it came over, but it was coded wrong. Have them to resend it over with the proper code and we'll pay it. Guess what? Have it sent back over. They pay it. Maybe your portion might be $0, or maybe your portion might be $50. I've had people who had stuff going to collection for $50. And okay, you don't have the $50. It's okay. Call up the hospital, the facility, whatever, and make a payment arrangement. It's worth it to do it. They will take $5. Just something. Make an attempt. Make payment arrangements on those medical bills before they become collections that haunt you. And even though, again, it's against your consumer rights because it's against the HIPAA laws because they're not technically supposed to be sharing your information, when they put medical collections and all that stuff on that. But still, just avoid all of that. Just contact the insurance, open the bills first, open the mail, and then contact the insurance company, make sure that it was paid properly. And then if it was, make a payment arrangement. If you can't pay it in full.
And I made a payment arrangement on one, and then later the insurance said they did cover some of it, and they did send me a check back. And if I didn't open my mail, I wouldn't have got my nice little check back. So sometimes mail's good, but rarely ever because I have phobia. But I guess you gotta look at it to avoid the $12 or whatever $6 that Natasha just discussed. I did too. I had one $12.50. I don't have a clue what it's for, but let me tell you, it looked like it was going to collections. I was like, okay, you know what? I don't want to ask no questions. I probably did it. I don't know. So, but it's just being like proactive, right? We got to be proactive. So I think my hot phone has slowed down. I think I don't have any more questions, but anybody still watching, because there are people still out here. But please ask us anything if you all want before we let these ladies. Oh, we got something. Carmen said, how does underutilization? Oh, we've never talked about that, like a no credit type of situation. How does underutilization take your score down? I guess it's like,
Underutilization or not having any credit on? Can she be a little more
so
specific
are
with
you
the
asking,
underutilization?
Carmen, are you asking like if that means people don't have any credit? Because underutilization is only going to make your credit good, from what I understand. But if are you saying if someone doesn't have credit at all? I don't know. Let's see if she answers us.
Okay.
Are you talking to me?
Oh, credit. She said
Oh,
that they have credit, but they're low balances. That should only
That's actually good
help
because you
you.
want to stay between 2 to 9%. As I said earlier, 2 to 9% is a sweet spot for credit card utilization. So, example, if you've got $100 credit card limit and you can stay between owing when it reports to the credit bureau. There's two important dates, so people don't know this too. There's two important dates to know about. There's the due date and there's the statement date. The due date is a date that the credit card company says, okay, this minimum amount is due by this date. Then it's usually a few days later, the statement date. This is a day that the credit card company takes a snapshot picture to say, what is your new balance? And then they send that over to the credit bureaus. So on the statement date, you want to owe between 2 to 9%. That's the sweet spot. Over that, it won't, well, it's gonna drop your score, but to have the best score, 2 to 9%. So $100, 2% is $2 to $9, 2 to 9%. So that's a sweet
So
spot
she
to be at.
also said, what if your credit is rarely used? So I think I'm going to add to this question because I think where maybe she's saying, like I have some cards that are zero that I sat on for quite a while that are zero. I freaked myself out and I thought that they would maybe close the card, which I don't want them to do because I want the open balance. So I went and charged something on a card that maybe I did or didn't need to make activity within that year or something to make it then paid it off the same day so I didn't forget to
Mhm.
keep the card active. I don't know if that's what she's asking, but is that true that we need to
If
Use
keep
the
you
it in the
card.
if
card?
you do, because I said earlier, they will sometimes close your card for not using it because again, they're in business to make money. If they can't make any money off of you, they may just close the card. So you do want to use the card, but again, you want to pay it. And again, I always say get cards that you can get something back. But if it's one of those cards from your college years, or if it's like that, New York and Company or Victoria's Secret or whatever, those community bank cards, use it so that they don't close it, but you don't have to overuse it. But you still want to use it so that it's not closed because they will sometimes
Clearance,
close it for inactivity. Will get a card closed.
you can buy clearance stuff and you can do birthday gifts, and that's what I usually do on those ones that I don't
Yeah.
use
hmm
much.
Yeah. Just you purchase something. I mean, use a card and pay it right off so it's not being closed. Because again, if that account closes, then your score is going to drop because now you just lost an account that was closed.
Okay. I don't see any more questions on Facebook.
and
You
and
have
I and I
anything on
want to
your
say too, guys. A lot of people get mad at their creditors because they piss you off. So you'll just be like, "Well, just close my account now." So you
No.
never want to close your account unless you have a zero balance. So if you do close it, don't close it before having a zero balance because if you do, it's going to drop your score. People don't
but
like
even
people that
I
owe
think
money and they don't on an account that's closed. So I'll have people where they'll close it because Victoria's Secret made them mad. Wait till it updates, pay them off. You being mad is your credit shouldn't be affected by your emotions.
No. And when you
yeah,
close
but
it, your score's going to
Amber
drop
said
anyway
you
because you
shouldn't.
closed it. Don't
Yeah, don't,
close
but
Exactly.
don't
it.
even
Don't
close
close
it
it.
at
Don't
all. Don't
close
get
it.
mad.
You're not doing anything to them. You're hurting yourself.
Yep.
Yeah, get mad and call your friend and yell about Victoria's
Right.
Secret or go on
Yeah.
Facebook and rant. Maybe they'll
Yeah.
send you something.
Yep. Yep.
Okay, I think. Are you good over there, Victoria?
I think I don't have anything else. Nope.
Okay, well, guys, thank you so very much. This clearly was a good topic. I know Natasha and I talked about when people really want to fix their life. Normally, you guys don't come on here and communicate with us when it's real life situations that we're trying to do. But when we get out and talk silly, or when we get on and talk about, I know she always does well with her 203K conversations, but we got to get you to the 203K. Like, you can't get there if you don't have the credit. So we got to get through the taxes that we talked about that nobody wanted to come and see us about, and the credit that some people were not RSVPing, but y'all came here. So this must be a safe spot for us to discuss that. But we
And
thank
if
you
you
guys.
stay ready, you don't have to get ready. So
That
let's
part.
stay ready because we never know what's going to come up. You don't want to find your
Absolutely.
dream home and now you got to fix your credit. It's frustrated. We got to put you through surgery. Let's just have great credit and be ready. So that way, no matter what opportunity comes, it's always ready for you. It's always ready. Your credit is always ready. And credit and home ownership, and we talked about this before, Lana. It does more. Like knowing you can buy whatever you want makes you actually not buy it because we only
Right.
buy stuff because
Oh
we
my
feel
God.
like we deserve it because we don't really qualify for it and we think we work hard. But once you can have everything you want, you realize you don't need it anyway, and then you opt out of it. So having credit is just a key to retirement. And I know a lot of people think when you're 60, you should start talking about retirement. But I'm already working on my kids' retirement, and they're not even, my son's 17, and we're trying to get IRAs and all of that stuff now because my parents wasn't able to do that. We need to start talking about retirement today because, I don't know if we disclosing ages, but I want to be able to have fun, when I get in my 50s and not have to worry about what 2 or 3 Ks I'm going to close. So we do that through credit, through home ownership, through planning, through building this confidence. So now when you walk in the door, through your employer, you got confidence now. Instead of getting $30 an hour, might get 42 just because you walk different because you got an 800 credit score and
Your
not a
posture
450. So now
changes.
you have lack of confidence and you feel like because your credit score is low, you deserve to make $20 an hour less than Chad, whose credit score is high. So let's just get it all together so that way we can build and grow and take each other to the next level, and then make sure that you motivating those people next to you, around you, and underneath you, so you can bring
Absolutely.
everybody up, and then we can make a difference as one team.
Yeah,
Absolutely.
that is so great because Natasha is right. Like I almost went down. I went downtown to look for a property for myself. Like I'm gonna live downtown because I can, and I'm
Mhm.
gonna do this, and I'm gonna walk outside, and I might not need a car anymore, maybe or maybe not. And then I went there, and it was 900 square feet, and I have 13, and I had paid off my house, and I said to myself, I don't even want to buy nothing. Like I don't want to buy.
And
So never mind. I just am gonna help other people get to where I want now. If I decide I want to retire and I want to go to Florida or wherever else, then you have that opportunity. But you want to get your credit
absolutely.
all the way ready, like Natasha said, ahead. Because when you guys call us and you're telling me I'm paying $4,000 a month in mortgage and I mean, in rent,
Rent.
and y'all bought this house 12 times, we're trying to get you out as quick as possible. So we don't want to have to say, oh, now let's do all of these things. We want to get you out immediately because that landlord is thanking you and counting his money and going on vacation.
That's
So
You
right.
could pay my rent or yours.
yes, I like my land. I like my renters. I'm not gonna lie, but I also want them to get to done with me, and we can move the next person in so they can buy, and the next person can rent. So
Because what you guys have to understand is that after 30 years of owning, your house is paid off. And then when you become a senior, you get discounted taxes.
Yeah.
And when you get older, a
Senior
senior,
freeze.
your
Senior
taxes are
freezes.
frozen. So now when you
Hmm.
wake up in the morning, you don't have to worry about your mortgage. And that's one of the most expensive debt we have is our mortgage and our car notes, believe it or not. So if you don't have mortgage, and you got to pay for a car, that's the reason why people go to work every day. So,
Freedom.
credit is key to success, and it gives you the opportunity to open businesses, get business loans, and all of that stuff. And I'm sure Lana's going to have more um, situations where we're going to be teaching you about that stuff as well. But we just want y'all to win, and even if you don't use Tamara, or if you don't use me,
Right.
we just want you guys
What
to
you
get
want.
the
Absolutely.
information, to get off your
Absolutely.
butt and get out there and make a difference for you and your family because
Absolutely.
everything is available for you today.
yes. Well, I don't know if we can do any better exit than that, right? With Exit Strategy Realty. Okay, guys. Well, thank you so much. And thanks to the agents out there. I see many of you saying hello. And if you don't know Natasha, make sure you meet Natasha. I know she busy lady. She might kick you to somebody that works with her, but that's okay. That's amazing too. She's got some great people. But we're going to all grow together, and we will see you all next month. I do not remember our topic, but we'll try to put that one in there too. Maybe we'll make it something fun this time because people need a break from all this heavy stuff. We've been doing a lot of heavy lifting these last few sessions that we've had. But we thank you guys so much. Everybody is saying thank you to you guys for sharing the tips. Chanel is saying thank you for sharing. So we will see you all soon. Again, if you have follow-up questions, Natasha is on my Facebook as well as Tamara is. So if they don't see the question, we'll make sure they get it. We will follow up with contact information, and we'll try to put the next topic for next month in here as well.
If there's any topics you all want us to cover, then you can feel free to add those in the comments also.
Yes, because we want to know what you guys want to hear. We have a lot of resources, but sometimes what we think you want, you might not, you might have something else. Okay. Let me see. Denise, we're going to stay in contact. You are welcome. We will fix you up. And we were going to say bye-bye.
Bye.
And you guys have a great night.
Thank you.
Good night.
Wait. Victoria, where is everyone going? Is everyone leaving?
Yes, Lana. The show's over.
But wait, I have more to say. Is my mic still on? Can they hear me? What if they have more questions?
Well, they can always contact us.
How? How will they reach us after this show?
If you have any questions, our contact information is on the screen. Otherwise, we'll see you again in a couple weeks.